The Augusta Rule, otherwise known as Section 288. This is a very powerful tax strategy that many people aren't utilizing. The Augusta Rule states that homeowners can rent out their house for 14 days or less and pay zero taxes on the rent income they receive. The Augusta Rule was initially created for the residents of Augusta, Georgia, to rent their homes during Masters Week and not have to pay any tax on the rental income they received. Now, there are a few rules that you have to follow to utilize this strategy. The first is you must rent your house for 14 days or less. If you rent it for 15 days, then you can't utilize this rule and you have to report all the rental income. The rent you charge must be reasonable for the location and time. If I have a home in Vancouver, Washington, I can't charge the same if I had a home in Augusta, Georgia, and it was during Masters Week. Lastly, you can't write off any expenses related to the rental, things such as real estate tax and interest prorations, cleaning, or repairs. Now, the best utilization of the Augusta Rule is actually renting your house to your business. In this case, you can write off the expense from your business and pay zero tax on the personal level. Let me explain. Now, let's say I own this business, Buff Accountant LLC. In this example here, I have gross income of 100,000. I then rented my house to my business once a month. That's $12,000 for the whole year. That means I can write off this $12,000 and now my net is 88,000 and that is what I'm going to be taxed on. However, normally, since I will be receiving this rent income, I'm also going to be taxed on this $12,000. This will flow through to my individual return. I'll have $12,000 of rent. However, I can write off this $12,000 using the Augusta Rule, Section 288 deduction, and now I'm going to have to pay zero tax on that $12,000, and I still get the write-off at the business level. Now, to use this strategy correctly, there are some considerations you have to keep in mind. If you're already taking the home office deduction, you cannot use the Augusta Rule in conjunction with that. Your business must be set up as either an S corporation, partnership, or C corporation. If you're a single member LLC and you're taxed on a Schedule C, you cannot utilize this strategy. In order to correctly record this at the business level, you must issue yourself a 1099 miscellaneous for the rent income you received. You will then report this income on your individual return and utilize Section 288 deduction to write off the income. You must have substantial reason to rent your house to your business. This can be something like hosting a party for employees or clients, or having a business meeting at your house. Like everything, this should be documented. Something such as taking pictures or something like taking attendance of people who were there. That will keep you safe in case of an audit. If you want to learn more how to set up this strategy correctly, please shoot me a DM and we can schedule a call and get you set up to use the Augusta Rule.